Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, April the 4th, 2025. My goodness, what a week it has been. Let's take a look here at the week. You can see there's bonds up at the top of the list. We'll take a look at those. Gold up at the top of the list, up to about 2%, and everything else down. Definitely a very, very negative week in many, many ways. We're going to have to take a deep look here into a number of things here. So pause your video player at any time for more details. This was a very ugly day yesterday. That was Thursday. The left panel here is the S&P 500 stocks. Those are the worst losers here. You can see just tons of double-digit losers. Middle panel is Toronto stocks. So there's like Aritzia, Shopify, both down almost 20%. And then there's the InSync Universe stocks. These are all top loser lists. So you can see here. So again, even stocks that have outperformed 1 through 10 years. I mean, nothing was saved in the market that took place yesterday. It was very, very ugly. Let's zoom out. Okay, so the S&P 500. This is a monthly chart. Broke out end of 2023, really, kind of moving higher, and this is called a cup with handle, and we're now coming in here. We've been falling. We got a MACD that's going to be turning negative very, very early. This is only April, but at the same time, the reason we always want to zoom out is because it's hard to take a day's perspective and certainly the headlines. And keep it in context. So yeah, it's bigger picture, it's an uptrend, but yeah, it's been a little bit of an ugly period here, to say the least. I will be the first to admit that over the years, I have made some corrections look very easy to handle. I can't say this has been easy. Not only has it not been easy, but it probably doesn't look like it's easy. It has been complicated, and this market has been challenging. So take a look here yesterday. This is the VIX S&P model, which fired a buy signal without question a week ago, or sorry, 2 weeks ago. And the bottom line is, this is the problem with markets, is that they're capable of moving. And yes, we can all point to headlines and say, post these tariff headlines the other day, markets are moving. And the bottom line is that all asset prices are moving, and they're all impacting in various ways, some of which we definitely do not know yet. And it is not as easy as just saying this will happen. And we've got to continue to evaluate the information that comes in. This is the VIX in the middle panel breaking out. This is a very big bar, going back above 30 there, or at the 30 level, but regardless, pushing above that last high. So again, into the zone, meaning again, when volatility spikes, that tends to set up a buying opportunity. But again, when volatility looks like that is spiking upward here, that means the market is coming down. And again, by the look of the futures this morning, I'm recording this before the open, the market is going to have another rough morning. We had an explosion. We had an explosion of new lows yesterday. So again, that's 21% of the Russell 1000. That'd be over 200 stocks making 52-week lows. So again, lots of stocks going down here. This is actually the biggest spike in a couple of years. That is not a good thing. You can see here's the level on the Russell 1000. Here we'd held that level. We're trying to turn back upwards, and then yesterday, again, just bottom fell out. Let's look at the biggest assets, continue to zoom out here. Bitcoin on the weekly chart, really nothing is going on here. It's just continued to consolidate without question. This is a higher highs, higher lows uptrend. We're sitting oversold. Now the S&P here definitely is where it starts to look heavy, because again, things had kind of consolidated a little bit here for about 3 weeks. And now yesterday, or this week rather, we're kind of going lower. It looks a little heavy to me without question. The gold stocks, or gold rather, physical gold has been very, very strong, has been outperforming in a very strong uptrend. Did reverse a little bit yesterday, but you can see that's clearly an uptrend. Again, the biggest stocks have been falling harder than the market. So you can see here, this is the last 2 weeks here, just looking at the biggest stocks in the market. Tesla is the only one actually that's actually up. But again, volatility is so high. Please don't be confused. I mean, I think Tesla is down 5% in the pre-market. The point is, stocks move very, very quickly. You can see Nvidia getting the worst of it over the last couple of weeks, down 13.5%. But all the big stocks, right? The Apples, Amazons definitely got hit yesterday. I don't know whether, again, investors want to go and reassess the impact, of course, on some of these changes that are going to take place in some of these companies. We just do not know yet. Now, the government, if anything, would like yields to fall. There's no doubt about that. This is 10-year yield. So let's zoom out. This is 3 years, okay? So 3 years, yes, on the right side of your chart, if you keep your eye right here, we can see that, yes, yields have been falling, absolutely. And here they are. They've fallen below this horizontal line, but that just looks to me to be kind of a line of demarcation, again, where we've got prior kind of highs marked from 2022. Yields went to all-time, or not all-time highs, but highs for the move in 2023. And you can see here, so again, really chopping around. So I'm not going to really go as far as saying yields are falling, but yeah, they have fallen recently. But again, the government certainly is going to want to see this continue to sort of weaken here. That would be a positive thing, certainly from all the borrowing standpoint. But again, remains to be seen whether that could or will happen. When we still look at these, stocks versus bonds ratios, While on the right side, the S&P, sure, I agree, this has been a sell-off, but this is still an uptrend, right? And this is the problem is that we have as investors, the old days you used to be able to allocate capital and you allocated to bonds when stocks started to sell off. The problem is that these have been 5-year uptrends in place here. And again, given where yields are and the fact that yields aren't even falling, it's very tough to sort of go and think this is just the greatest thing to kind of go and contemplate, perhaps in the short term. But again, we've got to continue to zoom out here and again, be defensive in many ways, because don't forget, bonds have actually provided tremendous losses over the last several years. And again, I think that is something that is often under talked about. Now, here's another example. I mean, stocks on the left side, the Toronto stocks have outperformed the US for sure on the left side, but just, again, reminding ourselves, look at this. I mean, in 2014, you could sell the Toronto stock market for 11.2 ounces of gold. Today, you'd only get 5.5. What does that really mean? Well, it means gold has outperformed, right? So gold has been an asset that has continued to sort of and definitely be embraced by a number of countries, certainly not Canada, who owns none. But again, countries in the East particularly have continued to diversify their own financial bases. Again, we've got to just continue to evaluate all alternatives to us as investors. Again, stocks are only one asset class. They are a big asset class. The Canadian dollar, I had pointed out, bottomed at the beginning of February. That bottomed in the face of the threat of tariffs. Yesterday had another big move as the US dollar generally came down. You can see this is kind of, we'll call this a breakout. Again, this is a higher highs now. So we now have higher highs and higher lows on the Canadian dollar chart. So to add kind of, challenges, certainly from my perspective, you sit here and you raise cash in a portfolio, well, suddenly, US cash and certainly US stocks have an added risk with currency that starts to move against them. And again, the Canadian dollar has been so weak, but the bottom line is you have to be very, very careful here. So repatriating some of the currency probably makes sense. Although again, as I pointed out at the beginning of February, would not have made sense in the face of tariffs or the threat of tariffs and the damage supposedly that was going to be done by the Canadian economy. I think lots of things remain to be unseen. So take a look at two ETFs here that we continue to own, FGRO on the left, WXM on the TSX. I want to point this out because look in the bottom panel here. These are basically making all-time highs versus the S&P 500. The problem is, let's not forget, we can compare relative strength all day long, but if the denominator, in this case, the S&P 500 is falling, it's not as impressive to make relative highs. And the reason is because we still need absolute strength. And you can see we still have definitely, ETFs here that are above the last lows, but at the same time, again, relative strength starts to shift a little bit when the momentum of the underlying denominators changes as well. Here's 4 stocks, and again, I've pointed out one looks a little different. We've looked at all these stocks before. You can see Agnico Eagle, definitely an uptrend. Dollarama made new highs yesterday on earnings. Berkshire Hathaway has just continued to be very strong, but Broadcom. So Broadcom has been the strongest stock in the semis, been owned for years by our clients, and unfortunately, this looks like a lower low. It not only looks like it is, and again, this is the problem, is that stocks can come in so considerably before trends change. And there are so many ways to measure trends, short-term trends, intermediate-term trends, and long-term and whatnot. And the bottom line is it's challenging. It's challenging to decide on that line of buying versus holding versus selling and taking gains and paying taxes and these kinds of things. They're challenging decisions, and they're all part of making investing decisions. Let's finish off with Sector Watch. Staples up at the top of your list here in Canada. That's really the grocery store stocks have been strong. And things like Dollarama. Utilities have been bouncing here a little bit for sure on the US side. And then again, technology on Canada down at the bottom of the list. Shopify was down 20%, technology in the US as well. So very, very nasty week here. And this has been a very challenging few weeks. It's just continued, and it looks like it's going to continue this morning. So again, we've got to be very, very careful, cautious, just continue to be open-minded, at the same time aware that lots of things are happening and volatility can capture our emotions. We have to be very, very careful. I will continue to be careful on behalf of our clients. Please follow along on X, where I will continue posting charts. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.